Hi, Peter. How are you doing today? Been quite a busy few months for you, must be.
It has been very busy. Yes, Gilbert. Nice to be with you once again.
Yes, we're glad to have you in April in our Silver Conference. And of course, we know what's happened since then from the silver price. And tell me about the whole thing. Obviously, we've been talking about silver price is undervalued, it's going to move up, we'll have a strong bull market. But do you expect this kind of movement in the last few months? Right now, it's over $60.
Yeah, I mean, I have been expecting a big move since early last year. That's when I started saying that, with the way that the major futures exchanges, their silver inventories had been drained quite dramatically from about early 21 or 22 up until that point. And I said, we've probably got about 12 or 18 months to for some kind of a squeeze. If this draining, I guess this pace continues, then we're gonna face some kind of a squeeze. And finally, that's pretty much what happened. I think the market started to grapple with this in the early part of this year, realizing that was likely going to be the way it was going to play out. And then the move that we saw this whole sort of spring, summer, fall really spoke to how the market realized that yes, the supply is very, very tight. We're already in our fifth year of deficit. We don't see meaningful new supply coming to market in any way. And so I think the market has realized, yeah, there's no new silver coming to the market. We need it, and we're consuming more than we are producing. That's coming out of secondary supplies, which is mostly on these futures exchanges, and those are being drained. And so the only reaction is what we got, possible reaction, higher silver prices. And so that I think that's really what explains what we've seen happen.
Is it a crazy thing to think that silver price will be able to break through $100 anytime in the near future?
Well, I don't think it's crazy. I don't know about near future. I do think it's very possible in the next, say, maybe, couple of years. But honestly, I'm personally a little bit surprised. Maybe I've been jaded because have been following this for so long. 3 years ago, when I published my book, The Great Silver Bull, I talked about how we should expect this kind of action to take place and how the market was tight already at that point. Was thinking that we would see 45 by, sort of the end of this year. We're already above 60 and it's, early December. So honestly, I'm somewhat, taken by surprise by the extent of the move. I thought we would probably see 60 at some point next year. Frankly, at this point, anything can happen. We could see
Yes.
it, we could see it go a bit higher from here. We could see it consolidate. We could see a correction that would also not surprise me. And I know I'm not really being very helpful maybe to your listeners because I'm not being that specific, but I'm taken by surprise, honestly. Any sort of near-term scenario, going along one of those three possibilities is obvious, I think, at this point, at least for me. But given the tightness in the market, a consolidation and even, a gradual move higher from here really would not surprise me.
Yeah, let's touch upon the fundamentals a bit. You mentioned we're in the already the fifth consecutive year of deficit in the silver supplies. Are we seeing any new major mines coming online at all in the next couple of years to sort of ease that?
So I don't know about it easing. We do see some mines coming online in the next few years that will help. But given that we continue to face challenges with mining, with falling supply overall out of Mexico, out of Peru. Frankly, I think we'll be lucky with new mines coming online, just maintaining mine supply, which is not great for the supply demand balance, but it's very good for the silver price, as you can imagine, because it keeps it very tight. So, sort of the major ones that coming to mind, or the major one maybe coming to mind in terms of significant supply, is mainly from Endeavour Silver. They have the Terronera mine, which has recently started up commercial production, and that's going to bring several more million ounces per year to the market. But for your listeners to have some perspective, the silver market is 1 billion ounces a year. About 850 million ounces comes from mining, and about 150 million ounces, the balance comes from recycling. So we may see a bump up in recycling because silver prices are high and there's more motivation to try and, extract silver from existing applications. But frankly, from mine supply, I'm not seeing much meaningful movement. As you know, it's 10 to 15 years or longer from discovery to production. It's going to remain tight. In fact, the Silver Institute themselves said that I think it was just a couple of quarters ago, they said that they expect that over the next 5 years, we're going to not only see silver deficits continue, but we're also going to see new record deficit levels. So that's saying a lot.
So the demand side, do you see pretty steady upwards in terms of industrial usage in terms of that growth or demand?
Yes, yes. Industrial usage continues to remain very robust. The disclaimers are that because of silver prices being high, there is some ongoing thrifting. What I call at least 800-pound gorilla is the solar demand, because that's 20% of all of the silver supply gets consumed by solar every year, 200 million ounces. And that remains pretty robust. I'm hearing things about and reading about thrifting increasing, meaning that each individual panel will potentially take a little bit less silver. And so that makes sense for the manufacturers with a higher silver price are trying to find ways to reduce silver consumption and still maintain the output. But we're also transitioning from this older technology called PERC to a newer technology called TOPCon and even HJT. TOPCon takes 50% more silver per panel. HJT takes up to 150% more silver per panel. I think that's going to help balance out potential thrifting. And the reason that manufacturers would go to these higher silver consumption technologies is because those panels are more efficient. They produce more electricity. And one other thing, Gilbert, to keep in mind is this whole thing. I mean, I know AI is a big deal with technology and people pouring money into these AI stocks, but on the practical side, the picks and shovels side of it is that data centers and AI data centers, this is mostly concentrated in the US, vastly concentrated in terms of, data centers and AI consumption of electricity. I think it's something like 80% globally is in the US. So let's talk about the US. Over the next 10 years, data centers demand for electricity is expected to grow about 22% per year. AI electricity demand is expected to grow 31% per year over the next 10 years in the US. So where are they going to get their power? Utilities are already telling them, we can't promise you we're going to be able to deliver the power that you need. That's huge new consumption for these technologies and these trends. So they're looking at trying to be as self-reliant as they can. The first shift or the first sort of target for them, and we saw this with, I think it was Microsoft, went to nuclear. They want baseload power, which makes sense. They need this sort of constant supply or access to power for a data center. You don't want it sort of fluctuating. So they went and took this unused nuclear power, that 3 Mile Island. But these kinds of opportunities are limited. And to approve, fund, build, and bring online nuclear power takes 15 years. Solar takes a year and a half. That's 1/10 the time of nuclear. And we've seen the shift. Tech companies in the US that are looking for carbon neutral new sources of power to gain access to electricity have been taking up solar to the tune of 5 times more this year than they have nuclear. And so it makes sense. It's much faster to build and permit. If you have the land to build out your own solar farm, you're also not depending on the utility. So you're self-reliant. Obviously, there's a maintenance cost, but once you have this thing paid for, the maintenance costs are pretty low. And as I say, you're completely self-reliant. So I got pushback when I said that I thought that these data centers and AI companies were going to shift towards solar rather than nuclear. And it was, I think, mostly because it's not considered baseload power, but there's a really interesting development here as well. And it's the fact that um, batteries have become a really, really big deal when it comes to solar. So in 2025, we are going to install batteries that will match 60% of the 2023 solar power installations. So batteries really are a game changer with solar, clearly shifting things and making solar what we call baseload power. Because as you know, sun doesn't shine at night; it shines in the daytime. If you can harness that power, store it, and overnight draw on the stored power in the batteries, then you've basically made solar baseload power. And I think that's why we're seeing data centers and AI demand shifting towards solar. The battery thing has been a game changer for solar.
Interesting scenario happening there. Another question I want to ask is we're talking about the silver price. Do you believe there's a chance that the silver price now is over 60 to be able back down to the, 30 to $45 range back again?
Crash, I doubt it. Honestly, I think that if you look at how, and I've been honestly, personally, a little bit surprised by this, but it's telling you, I think, kind of read between the lines. The relentless rise that we saw in both silver and gold, especially since this spring, says to me that there is a lot of cash sitting on the sidelines that now get the importance of exposure to precious metals. And any of these sort of minor or even sometimes more meaningful dips are being bought. So you know, you cannot rule out a crash, frankly, in anything ever. But I think that in precious metals, if we were to get one, it would be very short-lived because there's a lot of money sitting there waiting for that opportunity, being very opportunistic to buy in and take advantage of that. That's what I would say is the smart money. It may be a little bit later than us perhaps, but I think that's the smart money at this point that would really step in, as I say, take a meaningful position. So I don't think a crash is all that likely. A correction is possible. We got one from, that peak in October. Something similar would not surprise me. We are, in perhaps a little bit sort of a weaker seasonal time of the year. The stocks could also see some pressure now as we approach the end of year tax loss selling. Although there's a lot less losses this year, as you know, Gilbert. So there may not be as much pressure as we've gotten used to over the last, geez, almost a decade or more. But if it comes, I think that'll be an opportunity.
Spend some time to talk about the silver stocks, right? How's
Sure.
your silver stock portfolio this year? I presume it's been quite well. Let's talk about the two silver stocks that you mentioned it before in our program. The first one being Aya. This one is quite interesting because I saw something happen in September. There's
Yes.
a sort of a report for shorters came out in September and saying something about the company that pushed that stock down, but since then actually have bounced back and achieved really great heights. So any thoughts and comments on Aya so far this year and how it's been doing?
Yeah, it's been doing very well. If you look at the behavior around that short or that sort of negative report by this company that was clearly shorting them and took advantage of the fact shorted them and then put out some negative comments. The interesting part is how the share price behaved. We see a very short-lived V. So the price drops and bounces back almost immediately and then continues to move sideways and higher. And it's been doing really well, as you can imagine, given, not only the silver price lately, which it's, had great leverage to, but, company news. So a couple of things. One is that they put out a PEA on what's going to be their next big mine, Boumadine, which is their second mine or future mine in Morocco. This is a beast. It's a polymetallic deposit. has hundreds of millions of silver equivalent ounces. There are very few things like this, and they're hitting really good grades across the board. It's a little bit different from their existing mine, Zgounder, which is a pure silver mine, but that is also ramping up since they did an expansion about a year ago, reaching the level of about 5.5, 6 million ounces, I think by the end of this year into next year. And so, again, this is a rarity. They are doing hundreds of thousands of meters of drilling. This is, a drilling machine, and they're spending a lot of money on it. They're also, turning out some pretty good cash with their silver mine as Gunder, but plowing a lot of that money back into the ground and getting some spectacular results, 10, 15, 20 meters of multiple hundred grams per ton silver. We're seeing that at Zgounder. We're seeing similar kinds of grades at Boumadine. What's nice there is that, as I say, it's polymetallic. There's a fair bit of gold as well, and then you have some base metals to top things off. So not a pure silver mine at Boumadine, but really a pretty spectacular project that, we could see come online in the next few years.
How about the second one, Sierra Madre?
So Sierra Madre has been ramping up their producing mine. That's been doing really well. They're starting to be cash flow positive. Also, a very nice thing. I do want to say something interesting. I've noticed in the last few months that this seems to be a recurring theme. You see more and more juniors that are either producing and becoming self-sufficient with cash flow, and then taking some of those profits and plowing them back into exploration, or explorers that are looking to acquire. And I've seen this and I've heard this repeatedly when I meet with these mining executives at conferences. I can tell you without a doubt, this is a recent trend that I think is going to continue. So that's something that, your viewers and listeners can watch for in this space. Sierra Madre is doing very well. As I say, cash flow positive, taking that money and plowing that back into exploration and getting some really good results with that. That's one I think that should be definitely watched.
To conclude, is any new silver companies that in 2026 the investors should be paying some attention to?
Yeah, a couple I'd like to mention. One was added to our newsletter not too long ago called Pacifica Silver. They are an exploration play. This is an area that is not too far from Isla with their spectacular project, Panuco. And this is a company that is actually owned. When they went out and raised $10 million to go at the beginning when they went public, they got some very big names that went in and supported them. Names like First Majestic, like Vizsla, and a couple of others. So, that's one to watch. They are drilling now. I think we're going to see some drill results pretty soon. That is one that I think makes a lot of sense to keep in mind. So yeah, there's lots of things happening, and I think that this is a space that people should have some exposure to.
Great to hear from you again, Peter. We're all looking forward to another spectacular year for silver in 2026, and I wish you a Merry Christmas and Happy Holidays there, and until next time we speak, okay?
Appreciate that, Gilbert. Thank you so much. Looking forward
Thank
to
you,
talk to you
Peter.
soon.